Hello everyone, this is Dr. Rupali Rathod. I would like to discuss regarding the problems based on final accounts of joint stock company. In this particular video, I would like to discuss regarding the problems which are related to the assets and liabilities. Now let us see regarding the problem number 1. From the following extract of trial balance, prepare note to account relating to reserves and surplus in balance sheet. 10% preference share capital 1 lakh, equity share capital 5 lakhs, general reserve 50,000, securities premium 20,000, capital redemption reserve 30,000, opening balance in statement of profit and loss account 1 lakh. So in this particular example they have given the trial balance. From the trial balance we are supposed to prepare the note which is related to the reserves and surplus of balance sheet, or it may be statement of assets and liabilities. Now 10% preference share capital is nothing but 1 lakh. Equity share capital is 5 lakh. General reserve, securities premium as well as capital redemption reserve. Three things will be directly reflected in the reserves and surplus account in the outer column. Opening balance in statement of profit and loss is nothing but the surplus opening balance. If there is a current year profit, that profit we have to add it. Additional information like current year profit after tax is 2 lakhs. So already we from the balance sheet last line was opening, that is from the trial balance last value is nothing but opening balance in the statement of profit and loss around 1 lakh rupees. Now current year profit is 2 lakh rupees. Total it will be considering like a 3 lakhs of amount. Current year income tax rate is 30%. On 2 lakhs, current year profit as it was 2 lakhs, on that 30% has to be charged. 30% of 2 lakhs is nothing but consists regarding 60,000. 2 lakhs minus 60,000 will be considered as 1,40,000. Board of Directors proposed a dividend of 20% on equity capital. On equity capital in the sense it may be either like a equity share capital 5 lakhs rupees. On 5 lakhs they have charged 20% of the proposed dividend around 1 lakh. Transfer of rupees 40,000 to general reserve. From profit general reserve will be transferred. Dividend distribution rate, tax rate is 20%. Now let us see the solution. Solution for reserves and surplus. Capital redemption reserve 30,000 directly outer column. Securities premium 20,000 directly outer column. Generalism as it is consisting opening balance 50,000 which is given in the trial balance, and add transfer from current year profit as it was given in the additional information 40,000. 50,000 plus 40,000 is total 90,000. Then surplus in statement of profit and loss. As per the surplus value, opening balance is 1 lakh which we get it from the trial balance, last line of the trial balance. Next is regarding the add profitability, that is profit of the current year has been given in the additional information, that is 2 lakhs of amount, total 3 lakhs. Now less appropriation. Appropriation is nothing but transfer to general reserve. From current year profit 40,000 has been transferred to the general reserve. That amount we have to deduct. Preference dividend is nothing but 10% preference share capital as it was consisting 1 lakh. On 1 lakh directly 10%. So 10,000 preference shares. Equity share capital consists regarding 1 lakh. 1 lakh in the sense on 5 lakhs 20% of the proposed dividend is there. So 1 lakh of amount. Next, dividend distribution tax is nothing but on 1 lakh 10,000. How you got 1 lakh 10,000 in the sense 10% is your 10% preference dividend. It is equivalent to 10,000. Equity share is consisting like total amount of 5 lakh. On 5 lakh 20% is nothing but 1 lakh. 10,000 plus 1 lakh is 1 lakh 10,000. On 1 lakh 10,000 dividend distribution tax is nothing but 20%. So 22,000. When we add all the appropriation value, that is transfer to general reserve 40,000, preference dividend 10,000, equity capital of 1 lakh and dividend distribution tax of 22,000, total amounted to rupees 1,72,000. This amount has to be deducted from your profitability, that is previous year profit plus current year profit, as it was 3 lakhs of amount. 3 lakhs minus 1,72,000 consists regarding 1,28,000. Now this amount has to be added to the other values which are there in the outer column of your reserves and surplus, as it consists regarding the capital redemption reserve 30,000, securities premium 20,000, general reserve 90,000, surplus in the statement of profit and loss as it was total value 1,28,000, total amounted to rupees 2,68,000. This is your surplus. Next, problem number 2. ABC Limited has authorized share capital of 20 lakhs consisting of 2 lakhs equity share capital of rupees 10 each. In this sense, if you are finding equity share capital 20 lakhs, 2 lakhs into 10 will be 20 lakhs. So total authorized capital consists regarding the 20 lakhs. The following is the extract of trial balance. In the sense, your equity share capital 1 lakh shares of rupees 10 each consists regarding 10 lakh. Out of 2 lakhs, only 1 lakh has been considered for issues, redemption, as it is issue, paid up capital and all. 1 lakh equity shares has been considered. The face value of the equity share is same as it is 10. So 10 lakhs of equity shares. Calls in arrears is consisting like 20,000 shares at rupees 5 per share. In the sense 1 lakh rupees. How you got this value? In the sense, out of 1 lakh equity shares which has been issued, there is an calls in arrears of 20,000. 1 lakh minus 20,000 will be remaining 80,000. 80,000 into 10 will be 8 lakhs. Total of 8 lakhs we have already collected. But there was an error. Error in the sense 20,000 into 10 instead of into 10 it is only 5 rupees. So on 20,000 of equity shares only up to 5 rupees we have collected. So 20,000 into 5 per share is nothing but consisting 1 lakh. Prepare a note relating to the share capital. So how we are preparing the share capital value. So see regarding the solution part. Note to account share capital. Authorized capital will be the total value. 2 lakhs equity shares of rupees 10 each. So it is consisting like 20 lakhs. Issued equity capital or capital is nothing but 1 lakh equity shares have been issued. So total amounted to rupees 10 lakh. But now when it comes with the subscription value or fully paid up value, we are getting only less amount. In the sense, on 80,000 as it was calls in arrears, 1 lakh minus 20,000, remaining will be 80,000 into 10. Up to 80,000 into 10, full value we got. 8 lakhs of amount, total amount we got on 80,000. Now subscription and partly paid up capital is regarding the 20,000. On 20,000, instead of getting 10 rupees, we got only 5 rupees has been paid by the investors. So what we can find? 20,000 into 5 will be 1 lakh. So subscribed and fully paid up capital is nothing but 9 lakhs of amount. In the sense, 8 lakhs plus 1 lakh is 9 lakhs. See regarding the solution number, problem number 3. Problem number 3. From the following trial balance of Chandra Limited as at 31st March 2018, prepare final accounts in the prescribed form. In the sense, both the things you have to prepare. Either it may be the statement of profit and loss account or it may be statement of assets and liabilities. Particulars, as it is a trial balance values. Particulars, amount it may be debit or credit values. Stock on 1/4/2017 2,10,000. Revenue from the sale of goods 10,50,000. Directly it will go to the profit and loss values. Purchase of stock in trade 7,50,000, as it is in again profit and loss. Wages 60,000, profit and loss. Discount again profit and loss account, as it is 15,000. Contributions to provident fund 30,000. Sundry expenses 75,000. Dividend paid for 2016 and 17 27,000. Profit and loss appropriation account as on 1/4/2007 45,000. Share capital 3 lakhs of amount. Continuation to this one. General reserve 30,000. Bills receivable and payable. Bills receivable is nothing but 21,000 in the credit side. Payable is 30,000. Creditors and debtors. Your debtors value is 60,000. Creditors value is 49,500. Bank loan is 1 lakh. Machinery 90,000. Furnitures 57,000. Patents and trademarks 18,000. Bank 1,20,000. Securities premium 16,500. Building under constructions 1,50,000. Patent under development 50,000, employees provident fund 1 lakh amount. Additional information or other information, stock on 31st 3 2018 was valued at rupees 2,40,000. This is your closing stock. Depreciate machinery by 24,000 and furniture by 6,000. This will be in your profit and loss statement as well as balance sheet. Directors proposed dividend to rupees 15% on capital and to transfer to general reserve at 5% of your current profit. Next is regarding the provide for managerial remuneration at 10% of profit before providing for taxation. So whatever the profitability is there, before paying tax, you are supposed to make the payment of managerial remuneration with a percentage of 10%. Make a provision for income tax 50% of your profit. If your profit is 1 lakh, on 1 lakh 50% in the sense 50,000. Provide for dividend tax at 10%. So this is considered regarding the values. Note to account forming part of statement of profit and loss, as it is a statement of profit and loss. Before preparing the statement of profit and loss, we are supposed to prepare regarding the note which are related to the profit and loss statement. So note number 1, revenue from operation. Revenue from operation is given in the trial balance 10,50,000. Next, note number 2, other incomes. Other incomes is nothing but discount has been given in a trial balance credit side, as it is a discount earned 15,000. Note number 3, purchase of stock in trade. Purchase of stock in trade is nothing but 7,50,000. Note number 4, changes in inventories of finished goods, work in progress or stock in trade. So opening balance of stock in trade is nothing but 2,10,000. Now closing balance is given in the additional information, as it is closing stock in trade is 2,40,000. Opening minus closing is nothing but minus sign, minus 30,000. So 2,10,000 minus 2,40,000 is minus 30,000. This will be in your statement of assets and liabilities. Note number 5, employees benefit expenses, as it is wages 60,000, contributions to provident fund 30,000. So employees related benefit expenses are nothing but wages is your direct expenses, as well as contribution to provident fund 30,000. Total 90,000 should be reflected in your statement of profit and loss. Next, these are nothing but balancing figure. Note number 6, depreciation and amortization expenses. Total expenses we have to see regarding depreciations or amortizations. So as it is, depreciation on machinery 24,000, on furniture 6,000. Total 30,000 is reflected in your profit and loss statement. Note number 7, other expenses like sundry expenses 75,000, managerial remuneration 15,000. Total other expenses related to note number 7 is 90,000. Directly 90,000 has to be shown in your profit and loss statement. Calculations of managerial remuneration. Now let us see that what exactly is your profitability. So total revenue is nothing but 10,65,000. How you got this 10,65,000 in the sense 10,50,000 is revenue from operation, as it is consisting 10,50,000. Discount earned is 15,000. Total of that one 10,65,000 less total expenses excluding managerial remuneration. We don't know how much is a managerial remuneration. So 9,15,000. This 9,15,000 you will get it from your profit and loss statement easily. So 9,15,000. 10,65,000 minus 9,15,000 is 1,50,000. On 1,50,000 you are charging managerial remuneration at 10%. So 10% of 1,50,000 is 15,000. This is your managerial remuneration. As per the note number 7, other expenses, managerial remuneration has been added. So sundry expenses is 75,000, managerial remuneration is 15,000, total of 90,000. Next, statement of profit and loss, as it consists regarding the particulars, note numbers, amount column. So revenue from operation, note number 1, 10,50,000. Already you have calculated. Note for all the that is all necessary items which are related to the profit and loss statements. So revenue from operation is 10,50,000, other incomes 15,000, total income or total revenue, that is serial number 1 plus 2 is 10,65,000. Note number as it is the total revenue 10,65,000. Expenses part is nothing but cost of material consumed. Cost of material consumed is as it consists purchase of stock in trade. Note number 3, 7,50,000. Changes in inventories of finished goods, work in progress or stock in trade is minus 30,000. As we have already prepared changes in inventories. 2,10,000 minus 2,40,000. Stock opening and closing value. So minus 30,000. Employees benefit expenses is as per the note number 5, 90,000. Financial cost is not there in this particular problem. Depreciation and amortization total as per the note number 6, 30,000. Other expenses total as per note number 7, 90,000. Now total expenses are 9,30,000. As you were considering like 9,30,000 minus 15,000 was your total expenses excluding managerial remuneration, which we have used to calculate the percentage. How much is your managerial remuneration of 10%? So 15,000 was there, which is already added in the other expenses. So as we find like total expenses is nothing but 9,30,000. Now total revenue minus total expenses is your profit before exceptional and extraordinary items as well as tax. Three things are there. Total revenue minus total expenses is your profit before exceptional items, extraordinary items or tax. So you are getting difference of 1,35,000. 10,65,000 minus 9,30,000. So you are getting around 1,35,000. Next is exceptional items. In this particular example, we don't have any exceptional items. So profit will be same carried forward. That is profit before extraordinary items. Serial number 5 minus serial number 6. Serial number 6 is nil value. So directly carry forward profit is 1,35,000. Next, extraordinary items. In this particular example, again we don't have any extraordinary items. So nil. Again profit is carried forward. Profit before tax 1,35,000. Now total tax has to be seen. Already we got like tax expenses for current year is nothing but 50%. We got profitability of 1,35,000. On 1,35,000, 50% of the taxation has to be charged. So 67,500. After getting your, that is exceptional items, extraordinary items. Now after deducting these two, we got a profit of 1,35,000. On 1,35,000, 50% of the tax. 50% of 1,35,000 is 67,500. 1,35,000 minus 67,500 is profit or loss for the period from continuing operation. When you prepare a statement of profit and loss statement, it consists regarding two things: continuing from operation or profit from discontinuing operation. So profit from continuing operation is nothing but serial number 9 minus 10, as it is 1,35,000 minus 67,500 is difference is 67,500. Now next part is profit or loss from discontinuing operation. Nil, we don't have any values in this particular example. Tax expenses of discontinuing operation. When there is no profitability, no taxation on discontinuing operation. So nil. Same profit will be carried on. That is profit or loss from discontinuing operation after tax. That is 12 minus 13 will be again same carried forward profitability 67,500. Next we have regarding the profit or loss from the for the period 11th minus 14th item. Total directly again profit will be carried forward up to 67,500. This is your earnings, either it may be basic or diluted. So total profitability 67,500. Next note number, note to account forming the part of balance sheet, that is your statement of assets and liabilities. First we are preparing the note, then we want to reflect the note total balances in the assets and liability statement. So note number 1, as it is given in the trial balance, share capital issued and subscribed capital is total amounted to rupees 3 lakh. This 3 lakh is given in the trial balance. Next, note number 2, which is related to the reserves and surplus account. General reserve, already in the trial balance 30,000 it is given. As per the additional information, we are supposed to have additional during the year, that is transfer to general reserve from the profitabilities 5%. So your profit is nothing but 67,500. On 67,500 into 5%, so 3,375. 30,000 plus 3,375 is nothing but total 33,375. This is in the outer column. In outer column we find 33,375. Securities premium is already given in the trial balance 16,500. Now surplus value is nothing but opening balance is, as it is consist 45,000. Current year profit is 67,500. Opening balance 45,000 it is given in your trial balance. Profit for the current year is 67,500. Total 1,12,500. Now less appropriation. Transfer to general reserve. Already we have transferred 3,375 from profit only. So 3,375. Proposed dividend on 3 lakh, that is your equity share capital is 3 lakhs. On 3 lakh 15% has to be considered. So 45,000. Provision for dividend tax on 45,000. You are supposed to consider 10%. So 10% of 45,000, 4,500. Dividend for the year 2016-17, 27,000. It is already given in the problem. So total of appropriation is 79,875. Total appropriation. This value you have to deduct it from your 1,12,500. Inner column values only. That is your up to reserves and surplus profitability value is 1,12,500. From that less appropriation values, that is 79,875. Difference is 32,625. From a total of your altogether 33,375 plus 16,500 plus 32,625. Total surplus from revenue and surplus account is 82,500. Next, surplus, that is note number 3, long term borrowings. This is already given in the trial balance. Bank loan of 1 lakh amount. Note number 4, long term provisions, which is related to the employees provident fund. 1 lakh is given in the trial balance. Note number 6, which is related to trade payables. In this one, bills payable as well as creditors has to be added. Your bills payable is 21,000, sundry creditors is 49,500. Total of 70,500 will be going in your note number 6 as per the criteria, that is trade payables. Next is regarding note number 7, other current liabilities, that is your outstanding managerial remuneration is 15,000. This was already calculated, which was related to the profit and loss statement. In the sense, for profit and loss statement, we were supposed to charge 10% of 1,50,000. So we got 15,000 as managerial remuneration. This is considered as an outstanding managerial remuneration, which will be considered in your note number 7, other current liabilities. Now next is note number 8, short term borrowings. Provision for income tax is 67,500. Proposed dividend 45,000. Provision for dividend tax is 4,500. Total of your short term borrowings is 1,17,000. These all values most of the time you will get it from the note number 2. From note number 2 you will get reserves and surplus. From there you will get easily. That is provision for income tax 67,500. Proposed 50% of the taxation was done on 1,35,000. Your profitability, so 67,500. Proposed dividend is 45,000. On this 10% is 4,500. So total as per note number 8 balance is nothing but 1,70,000. 17,000. Next is regarding note number 9. Tangible asset, machinery 90,000 is given in the trial balance. We are supposed to deduct a depreciation 24,000. Remaining balance is 66,000. Furniture total value is 57,000. Depreciation is 6,000. Remaining balance is 51,000. 66,000 plus 51,000 is nothing but 1,17,000. Next we have regarding note number 10. Intangible asset. Patents and trademarks is 18,000 which is given in the trial balance. As per capital work in progress, building under construction is 1,50,000. Tangible assets under construction is patents under development 50,000. Note number 15, as it is related to inventories. Closing stock in trade is 2,40,000. Other notes related informations are not given in this particular example. So directly note number 15, inventories, as it is 2,40,000 is your closing stock. Note number 16, trade receivables. Debtors is 60,000, bills receivable 30,000, total 90,000 as per note number 16. Note number 17, as it is cash and cash equivalent is bank balance has been given in the trial balance, as it is bank value 1,20,000. Now let us see regarding the statement of assets and liabilities. When you prepare the notes, already working note or note values as per the schedules, it will become easy for us to directly add the balancing figure in the statement of assets and liabilities, as it consists regarding the particulars column, note, amount, total values. So equity and liabilities, under this one 4 classifications are there. Like equity and liabilities is nothing but shareholders fund. Under shareholders fund, A point is share capital. Note number 1, 3 lakhs of amount. Reserves and surplus. Note number 2, 82,500. We don't have any informations which are related to money received against share warrant. Nil values. Share application money pending allotment. Again nil values. Next is regarding serial number 3, non-current liabilities. Note number 3 we can say. Under this one, A point is long-term borrowings 1 lakh. Deferred tax liabilities net nil value. Other long-term liabilities is nil value. Next is long-term provisions. Note number 4, 1 lakh. Current liabilities, under that again 4 classifications we can find. That is short-term borrowings as per note number 5, nil. Trade payables as per note number 6, 70,500. Other current liabilities, note number 7, 15,000. Short-term provisions as per note number 8, 1,17,000. Total of your equity and liabilities, including your shareholders fund, share application and money pending allotment, non-current liabilities, current liabilities. Total of 4 is 7,85,000. 3 lakh plus 82,500 plus 1 lakh 70,500, 15,000 or 1,17,000. Total 7,85,000. This is your liability part. Next is regarding the assets part. Assets is nothing but divided into 2 major parts. Non-current assets, current assets. In case of your current assets, we can find like fixed assets. In fixed asset, again classifications are there, 4 classifications. Tangible assets, note number 9, 1,17,000. Already we have calculated note related to tangible asset, 1,17,000. Intangible assets, note number 10, 18,000. Capital work in progress, 1,50,000. Intangible assets under development, 50,000. B point, non-current investment. Note number 11, nil. Deferred tax assets, net value, nil. Long-term loans and advances, note number 12, nil. Other non-current assets, note number 13, nil. Current assets, as per current assets, classifications are there. Like current investment, note number 14, nil. Inventories, note number 15, 2,40,000 is given, which is related to like stock. Trade receivables, note number 16. In this bills receivable and debtors we have added, as it is 90,000. Cash and cash equivalent, note number 17, 1,20,000. Short term loans and advances as per note number 18, no value is there. other current assets, note number 19, we don't have any values. So as your assets has been classified, non-current assets or current assets. So as per the values, as it is 1,17,000 plus 18 plus 1,50,000 plus 50,000 plus 2,40,000, 90,000, 1,20,000. If you are adding all the values, you are getting around amounted to rupees 7,85,000, which is equivalent to your liability part. This is your vertical statement of assets and liabilities. So these are the examples which are related to the statement of assets and liabilities. Thank you.